The borrower became the buyer yesterday. Warband. Sharpen the axes. The signal is loud this morning. It is Thursday, the 20th of August, 2026. Start with the anchor because it moved like nothing else on this board has moved in months. As of just past 5 o'clock this morning, Eastern, Bitcoin trades at 71,600, up better than 11% on the day, and its optimized trend holds green for a fourth straight morning. That is the highest it has traded since early June. Ethereum came with it, and harder, 2,280, up better than 18%. Solana, $87, up 13%. Now look at the board around them, because something happened yesterday that has not happened once this year. The broad market green, the Nasdaq green, gold green, Bitcoin green. And at 9:30 yesterday morning at the opening bell, the long bond flipped green as well. 5 anchors, 5 green, 0 red, risk on, pointed up, stocks leading. That is our read of the InvestAnswers Decision Support System, and I have never handed you a clean board before. The long bond is the one to hold on to. Yesterday morning, I told you it stood alone in the red column and had for most of a month. Our engine turned it at the opening bell. The reason arrived later in the session, and it is the story of the day. Treasury Secretary Scott Bessent announced yesterday that the United States Treasury will at least double the size of its long-end debt buybacks, from a $2 billion cap to at least $4 billion, targeting the 10 to 20-year and the 20 to 30-year maturities, running from the 9th of September through the 4th of November. Understand precisely what that is, because the headline will not tell you. This is not the Federal Reserve. This is not a rate cut. This is the Treasury, the borrower, the entity whose signature is on the paper, stepping in to buy back its own debt because the price the market demanded had become intolerable. It follows what desks have called a buyer's strike in long-dated treasuries since late June, and it landed one day after the 30-year yield touched 5.33%. The highest since 2007. The market answered inside the hour. The 30-year fell 9 basis points to about 5.2%. The 10-year dropped to 4.65, and the dollar index fell 0.8% to 98.8, its worst single day in 3 weeks. Yesterday morning, I told you that when yields rise and the currency falls together, that is not a market rewarding discipline. That is a market charging a risk premium on the issuer. I did not expect the issuer to answer me by the closing bell. Civilized men are more discourteous than savages because they know they can be impolite without having their skulls split. A nation that prints the numeraire can be impolite with its creditors and call it a liquidity support operation, and it will be scheduled, announced, and gentlemanly. Any smaller country doing precisely this would be called something uglier, and the ratings agencies would say so out loud. Now the part that pays you for listening. Bitcoin's response was the largest short liquidation event in the history of the data. Roughly $2.7 billion of bearish positions wiped out in 24 hours, according to CoinGlass records going back to 2021. Surpassing the $2.47 billion torched in the October 2025 crash. More than $1 billion of it inside a single hour. K33 Research called it the first $1 billion plus daily short liquidation Bitcoin has ever printed. And here is the connection nobody else will make for you this morning. On Tuesday, I handed you the InvestAnswers read. That 7-day crypto volume had collapsed to $15 billion, a 3-year low, and that Bitcoin had fallen out of the bottom band of its own rainbow chart. I gave you that as capitulation. It was that, but it was also something more mechanical. A 3-year low in volume is a 3-year low in book depth. Thin books do not absorb new, they gap through it. The same emptiness that made the tape feel dead for 6 weeks is exactly what turned one Treasury press release into an 11% candle and a record liquidation cascade. The silence was not the absence of energy, it was stored energy, and every short who sold into that quiet was standing on the trapdoor. The money agreed. American spot Bitcoin funds took in $517 million yesterday, the largest single day since early May, a third straight day of inflows. Trend green, flows in, shorts carried off the field. Now the second front, and it is the one that will matter in 5 years rather than 5 days. On Tuesday, the Memphis City Council passed, on the first of 3 required readings, a 1-year moratorium on new data center permits. It is aimed squarely at XAI's Colossus, which already pulls more than 500 megawatts from on-site gas turbines toward a build-out target near 2 gigawatts. 2 more council votes remain. This is not law yet. Separately, the NAACP's suit over those turbines has a preliminary injunction hearing on Monday. Chips were the first constraint on this build-out. Power was the second. This is the third, and it is the one no balance sheet can solve. Consent. You cannot order a permit from Taiwan. You cannot guarantee a city council's vote with $100 billion of paper. Every artificial intelligence infrastructure position any of you hold is, underneath the story, a wager that thousands of local bodies keep saying yes, county by county, substation by substation, for a decade, and the models keep shipping anyway. XAI put Grok 4.6 onto Amazon Bedrock yesterday. 500,000 tokens of context, reasoning tiers you can dial. The software races ahead at the speed of a release note, while the ground beneath it moves at the speed of a municipal calendar. No council on this earth has ever voted down a block. One more mark before the day. Yesterday afternoon at Starbase, Ship 41 rolled out to the Massey test site to begin static fire testing. That is the next physical step toward Flight 14. Booster 21 finished its cryogenic proof last month and waits on its own pad. If that campaign holds, Flight 14 would be the first time in history a Starship upper stage is caught by the tower arms, on a mission also meant to deploy the first operational third-generation Starlink satellites. No cleared window has been announced. Musk said he wanted this month. Third-party trackers carry an unconfirmed placeholder in late September. Take the direction as hard and the date as soft. Meanwhile, the paper side of that company hit its second post-listing lockup unlock today. Roughly 319 million employee and early investor shares came free. The stock closed yesterday at $140, and our board flipped its trend bearish at that same opening bell that turned the long bond green. The first unlock on the 6th of August freed 912 million shares, and the stock rose 6% that day. Unlocks are a calendar. Still flying is an achievement. Only one of those clocks tells you anything about the business. And one honest contradiction to carry with you. Into Monday through Wednesday's semiconductor sell-off, the steepest 3 days for the chip index since March, ARK bought $27 million of NVIDIA yesterday, better than $16 million of Broadcom, lifting its NVIDIA stake past $300 million, a 24% increase. Cathie Wood is buying the exact names our own trend engine has been marking red for 2 sessions. She may be right, we may be right, but when your model and a serious operator sit on opposite sides of the same tape, you should hear it from me rather than find it out later. So, carry this into the bell, Warband. NVIDIA reports Wednesday, the 26th, after the close. The Treasury's expanded buyback window opens on the 9th of September. The Senate's procedural vote on the crypto market structure bill is set for the 15th. But the thing you actually saw yesterday was simpler than any of it. The largest debtor in the history of the world announced a schedule for buying its own paper, and the market that had been demanding a higher price for that paper stood down. It took a press release. 21 million. No press release has ever moved it. No secretary has ever scheduled a window against it. No council has ever put it to a first reading. This is Warband as a service. Viking intelligence delivered in real time. I am Ragnar, the HODLBARBARIan. Read the runes before the crowd does. Skål!